All right, welcome to The Explainer. Today we're tackling the Aussie stock market. You see, it's hitting these record highs, but what's fascinating is that it's telling two completely different stories at once. So let's get into it. So if you just glance at the headlines, you'd think everything is just fantastic. The market's soaring, right? It's almost at a record high. And this is all being fueled by big company profits and rising commodity prices. Sounds like great news all around, doesn't it?
But is it really good news for everyone? This is where we need to dig a little deeper, because under that shiny surface number, there's a way more complicated story going on. It's really a story of big winners and some pretty big losers.
Okay, so first things first, let's take a look at the day's performance. What does this near record high actually mean when you look at the numbers? It's actually a bit more subtle than you'd expect. The All Ordinaries Index, that's the one that covers more companies, it didn't move at all. It was totally flat. So all of that upward push, it came from the benchmark ASX 200, and even that only went up by 0.3%. We're talking about a tiny little nudge that just happened to push it into that record territory.
So, if the whole market barely budged, who was doing all the heavy lifting? Let's zoom in on the companies that were really driving this thing forward, the big winners of the day.
And wow, the absolute star of the show? That was ANZ Bank. I mean, its share price didn't just go up, it skyrocketed 8.5%. That's massive. And it sent their shares to the most expensive they have ever been. For a company that big, that is a huge, huge deal.
So you gotta ask, how on earth did they do that? Well, the story behind that number is pretty stark. They reported a 17% jump in their quarterly profit, and that was tied directly to some really aggressive cost cutting, which included sacking 3,500 people.
And it wasn't just ANZ either. Commonwealth Bank, their shares jumped too, thanks to better than expected earnings. And it was the same story for Origin Energy and for the gold miner Northern Star Resources. All of them came out with results that basically blew market expectations out of the water. But for every winner, there's always the other side of the coin. Not every company was celebrating. So let's flip it over and look at the ones that really struggled. And this is really the key point, the big difference here. For the winners, like ANZ, their success came from things they did internally, strategic decisions like cutting costs. But for the losers, their problems came from powerful forces completely outside of their control. And here's a perfect example from the insurer IAG. Yeah, their profits took a massive hit because they just got slammed with insurance claims after all those huge hailstorms and crazy weather we saw in Queensland and New South Wales last year. So yeah, an absolutely brutal day for IAG. And they weren't the only ones feeling the pain. The online retailer Temple & Webster also had a really rough go of it. Both of them ended up announcing profits that were way, way down from the year before. Okay, so now that we've seen the local picture, let's zoom out. How does all of this fit into what's happening globally? One of the big things propping up the Aussie market was that commodity prices were on the rise. We're talking iron ore, gold, silver, oil, they were all up. And since Australia exports a ton of this stuff, that's a really good sign for the broader economy.
If you look overseas, the picture was, well, all over the place. A real mixed bag. You had Britain and South Korea doing really well, but then Hong Kong took a pretty big tumble. And Wall Street? Kind of like our all odds. It was just flat. Not much happening there.
And last but not least, let's talk currency. The Aussie dollar was holding pretty steady at around 71 US cents. But the really interesting part? It was super strong against the Japanese yen, hitting a level we haven't seen in years. That right there is a reflection of some of this economic strength we've been talking about. So where does that leave us? Well, we have a market that's knocking on the door of a record high, but it's built on this foundation of really stark contrasts, right? You've got record profits fueled by job cuts on one side, and on the other, massive losses because of severe weather and, climate chaos. And it really makes you stop and think, when the market is thriving on that kind of thing, what does a strong economy really even mean?